For the speculator caught in the relentless downward spiral of losses, there comes a moment of profound crisis. The capital shrinks, the confidence shatters, and the market, which once seemed a field of boundless opportunity, transforms into an arena of certain defeat. He tries to fight back, to win back what he has lost, but every trade only deepens the wound. He is trapped in a cycle of hope and despair, his decisions no longer guided by logic, but by a desperate, frantic need to get even. It is at this very moment on the brink of total ruin that a radical intervention is required. Not a new tip, not a new system, but a complete and total reset of the mind, the methods, and the man himself. Jesse Livermore knew this state of crisis more intimately than any man. He had walked this path to the poorhouse not once, but several times, losing colossal fortunes in the process. Yet his genius was not just in his ability to win, but in his remarkable capacity to recover, to rebuild, and to return to the market stronger and wiser than before. He did this not by chance, but by adhering to a strict, methodical process of psychological and strategic reconstruction. He had, in effect, a personal action plan for stopping the bleeding, for silencing the emotional chaos, and for re-establishing the foundations of professional, profitable speculation. And this is that plan. It is not a promise of quick riches, for Livermore knew that easy money is a myth. It is a promise of something far more valuable, a path back to discipline, a 30-day guide to stopping the cycle of losses and rebuilding your entire approach to the market from the ground up. It is a plan that demands patience, honesty, and an unwavering commitment to its principles. But for the trader who is truly serious about survival, who is ready to abandon the flawed habits of the amateur and adopt the mindset of a master, this plan is the key to salvation. This action plan is a distillation of the lessons scattered throughout a legendary career. To truly understand the full epic story behind this plan, the failures that necessitated it and the victories that proved its power, the essential chronicle remains Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. This is not merely a book, it is a deep psychological portrait of a master speculator at work. For those committed to this study, a link to the edition featuring a unique, detailed chapter-by-chapter analysis by Max Davidson, an interpretation specifically designed to translate this century-old wisdom for the modern reader, is provided in the description below. Before we begin, there is one foundational, non-negotiable premise. For the majority of this 30-day period, you will not place a single trade. This may sound counterintuitive, even impossible to the man who feels an anxious need to be in the market. But it is the most critical component of the entire process. Your primary objective for the next 30 days is not to make money. It is to stop losing it. And the only certain way to stop losing money in the market is to not be in it. This is not a passive retreat. It is a strategic, tactical withdrawal to repair your equipment and redefine your battle plan. Week 1. The Great Pause and Brutal Self-Analysis. The first 7 days of this plan are dedicated to a complete and total separation from the market and a rigorous, unflinchingly honest examination of your past mistakes. The first step to curing a malady is to correctly diagnose it. You must turn off the ticker. You must delete the market apps from your phone. You must cease all conversations about stocks. As Livermore did when he sought clarity, you must find your own version of a quiet fishing trip, a place of mental solitude where the frantic noise of Wall Street cannot reach you. With the market silenced, your work begins. You must become an archaeologist of your own financial ruin. Take out your brokerage statements from the last 6 months or the last year. Spread them before you. This is the unvarnished, factual record of your trading, and it contains the secret to your failure. Your task is to perform a post-mortem on every single losing trade, no matter how small or how painful. You must become a cold, detached scientist, studying your own errors with a clinical eye. For each losing trade, you will ask a series of questions. the very questions Livermore implicitly asked himself after every one of his own devastating defeats. First, did I act on a tip or on inside information? Be honest. Was the trade your own idea, born of your own study, or was it a borrowed conviction, a whisper of hope from a friend, a broker, or an anonymous source on the internet? Livermore learned, at a cost of millions, to beware of all inside information. He knew that the man who trades on a tip is a man who does not know how to exit, for the reason for selling is never passed along with the reason for buying. Second, for each loss you must ask, did I average down this position? Look at your records. Did you add to the trade as it moved against you? Did you buy more at a lower price, hoping to improve your average cost? If so, you have identified the cardinal sin of speculation. You were reinforcing failure, throwing good money after bad. Livermore was absolute on this point. Of all speculative blunders, there are few greater than trying to average a losing game. You must identify every instance of this fatal habit. Third, ask yourself, did I hold on to this loss out of hope? Look at the history of the trade. At what point did you know in your gut that it was a mistake? At what point did the tape tell you that you were wrong? And how long after that signal did you hold on, hoping for a miraculous reversal? This is the measure of your emotional discipline or lack thereof. Every day you held a losing position after it was proven wrong was a day you chose hope over facts, a decision for which the market always exacts a punishing fee. Fourth, ask the strategic question. Was this trade aligned with the primary market trend? Look at the overall market during the time of your trade. Were you trying to buy a stock in a clear bear market, or sell short in a roaring bull market? Were you fighting the great underlying line of least resistance? Livermore knew that the big money was only ever made by trading in harmony with the primary trend. To fight it was to guarantee an eventual costly defeat. The journey of a speculator is often a solitary one, marked by the intense pressure of making high-stakes decisions alone. It is easy to lose perspective, to be swayed by the noise of the crowd, or to falter in your discipline after a series of setbacks. This is why we created this channel, to serve as a constant source of these timeless principles, a place you can return to, not just to learn, but to recalibrate your mindset. If you are committed to the path of a professional speculator, subscribe to our channel and return to these lessons. They are here to provide not just knowledge, but reinforcement and perspective when you need it most. By the end of this first week, you must have a written, brutally honest diagnosis of your own speculative failures. You will likely find a recurring pattern, a small handful of critical errors that are responsible for the vast majority of your losses. You are no longer ignorant of the cause of your affliction. You have looked your enemy in the eye, and you have discovered that it is, and always has been, yourself. This is the first and most difficult step toward recovery. Week 2, the study of the tape and market structure. Having diagnosed the errors of the past, your second week is dedicated to understanding the realities of the present. You will now return to watching the market, but with a critical difference. You will return not as a desperate participant, but as a detached, scientific observer. You will not place a single trade. Your only job is to watch, to listen, and to learn the language of the ticker tape. You are no longer a gambler, you are a student. Your first task is to identify the overall character of the market. Apply Livermore's first and most important question. What is the line of least resistance? Is the market as a whole in a primary bull trend or a primary bear trend? Watch the price action. Is it making higher highs and higher lows, or lower lows and lower highs? Forget the news, forget the opinions, forget your own hopes and fears. What are the facts as registered by the tape? Once you have a clear conviction about the market's primary trend, you will begin the next phase of your study, identifying the leaders. Apply Livermore's second great filter. Which industry groups are showing the most strength, leading the advance or the decline? Within those groups, which individual stocks are the undisputed generals, moving first and with the greatest force? And which are the laggards, the weaklings that refuse to follow? You are to become a student of group behavior, a professional assessor of relative strength. During this week, you will begin the most important practical habit of your new career. You will start your own records. As Livermore did, you will begin meticulously recording the price movements of the market leaders you have identified. You are not just watching prices. You are documenting them, studying their rhythm, their patterns of advance and reaction. You are looking for the formation of his pivotal points, the key strategic levels where the next great move will be born. The goal of this second week is to achieve a profound and lasting shift in your mindset. You are to transform yourself from an emotional, hope-driven gambler into a cold, detached, fact-based analyst. By the end of this week, you will no longer see the market as a chaotic casino, but as a structured, logical entity with its own discernible habits and laws. You will have a clear, objective view of the market's present condition, a view based not on what you wish to be true, but on what your own careful, dispassionate observation has revealed to be true. You have diagnosed your past, and now you understand your present. You are now ready to plan for your future. Having completed the first 2 weeks of this action plan, the speculator stands at a critical juncture. He has silenced the noise of the market, performed a brutal and honest post-mortem on his past failures, and has spent a week as a detached scientific student of the tape. He has moved from a state of emotional chaos to one of analytical clarity. He now understands why he has been losing, and he now sees the market as it is, not as he wishes it to be. He is now ready for the third and most constructive phase of his transformation, the forging of his new rules of engagement. Week 3. Forging the rules of engagement. The next 7 days are dedicated to creating a personal, written, and absolutely unbreakable trading plan. This is the constitution that will govern your every action from this day forward. A speculator without a plan is a ship without a rudder, at the mercy of every emotional current and gust of market sentiment. Livermore knew that his own success was built not on brilliant improvisation, but on the unwavering adherence to a set of sound, well-reasoned principles. Your task this week is to define your own. You will take a single sheet of paper. At the top you will write, "My rules of speculation." These will be your commandments, the laws you swear to uphold. The first rule you will write governs your entry into any trade. Based on your studies from week 2, the rule is this: I will only initiate a trade at a confirmed pivotal point. This means you will no longer buy a stock because it looks cheap, or because of a tip, or because you are bored. You will wait with the patience of a master for the market itself to give a clear strategic signal that a major move is underway. The second rule you will write governs your risk. This is the most critical rule for your survival. You will write, I will never risk more than a small fixed percentage of my total capital on any single trade. The exact percentage is for you to decide, but it must be small, perhaps 2%. This rule makes the catastrophic, account-destroying loss mathematically impossible. It ensures that you can withstand a series of inevitable small losses and remain in the game. It is the very definition of professional capital management. The third rule is the practical application of your new commitment to risk control. You will write, I will place a hard stop-loss order for every trade before I enter it. I will never move my stop further away from my entry price. This rule removes all emotional indecision from the act of taking a loss. The decision is made beforehand, in a moment of calm rationality. It is the mechanical shield that protects you from the destructive whispers of hope when a trade goes against you. It is the final, non-negotiable execution of Livermore's great principle. Cut your losses quickly. The fourth rule governs your actions when you are right. You will write, I will only add to a position that is already showing a profit. I will pyramid by buying on a scale up. This is your commitment to reinforcing success, the polar opposite of the amateur's fatal habit of averaging down. It ensures that your largest bets are always placed on your most successful ideas, with the market's own momentum as your greatest ally. This is how small initial probes are cultivated into great fortune-making lines. By the end of this third week, you will have this document. It will be your personal roadmap, your strategic and tactical guide. It is the product of your own hard-won experience and your new disciplined study. You have diagnosed your illness, you have studied the terrain, and you have now written your battle plan. You are no longer a gambler. You are a general preparing for a campaign. You are now ready for the final phase of your 30-day transformation. Week 4, the first disciplined trade. The final 7 days of this plan are dedicated to a single objective, the flawless execution of one single trade, conducted in perfect accordance with the new rules you have just forged. Your goal in this week is not to make a large sum of money. Your goal is to prove to yourself that you are capable of unwavering discipline. The victory is in the process, not in the outcome. Your work begins once again with patient observation. You will watch the market leaders you identified in week 2. You will track their movements, waiting for one of them to approach a clear and valid pivotal point that aligns with the market's overall trend. You will not force a trade. If no perfect setup appears for the entire week, then you will not trade. To refrain from trading is, in itself, an act of supreme discipline. You are waiting for the psychological moment, the high-probability opportunity your new rules demand. When the setup finally appears, you will execute your plan with the precision of a surgeon. You will consult your new constitution. You will calculate your exact position size based on your fixed risk rule. You will determine your precise entry point and your non-negotiable stop-loss point. You will have your orders prepared, your entire campaign mapped out before you risk a single dollar. Then, and only then, you will act. You will place your trade. Immediately after, you will place your hard stop-loss order. There is no hesitation. There is only the calm, deliberate execution of a well-reasoned plan. Now, one of two things will happen. The first possibility is that the trade will move against you, and your stop-loss will be triggered. You will be taken out of the position with a small, manageable, and predetermined loss. And in this event, you have achieved a great and profound victory. A victory? Yes. Because the goal was not to be right about the market. The goal was to be right with yourself. You followed your rules. You defined your risk. You honored your stop. You acted with perfect discipline. You have proven that you are no longer a slave to hope, that you can accept a small loss with the dispassionate grace of a professional. This is a monumental achievement, a foundational step in your new career. The second possibility is that the trade will move in your favor. It will show an immediate profit, confirming your timing and analysis. This, too, is a victory. You now have the opportunity to practice the next phase of your plan, the management of a winning position. You will have the chance to apply your pyramiding rule, to have the courage to add to your success. You will trail your stop-loss to protect your gains, practicing the art of letting a profit run. Whichever outcome occurs, by the end of this week, you have succeeded. You have broken the cycle. You have replaced emotional, impulsive gambling with a cold, disciplined, and systematic process. You have stopped chasing losses because you have learned to control them. You have stopped trading on hope because you have learned to act on facts. You are no longer the same speculator who began this journey 30 days ago. This plan is not an endpoint. It is a new beginning. It is the foundation upon which a long and potentially prosperous speculative career can be built. The work is not over. It has just begun. The market will continue to test you every day, to tempt you back into your old destructive habits. The battle against fear, greed, and hope is a lifelong one. But you are now armed with a proven set of weapons. You have a plan, you have a process, and you have the hard-won knowledge that success in this great game is not an accident. It is the certain and inevitable reward of unwavering discipline.